Alright, we're in action. What's going on, guys? It's me, Tim, and in this video I want to go over Indi semiconductor stock. INDI is the ticker. They just reported earnings. They're up like 15% today. So we're going to go over their earnings, we're going to look at the chart, and hopefully this video continues recording. I think I need a new cam link or something is going on with my computer, but it looks like it's still working right now, so let's roll with it. Now I'm here at Indi's investor relations site, and I will leave the link down below for you guys to access this press release as well. But let's go over what their report was. They delivered their Q3 revenue, $60.5 million, which is up 101% year over year and 16% sequentially or quarter over quarter. They expanded their non-GAAP gross margin by 226 basis points or 2.26% year over year to now a 52.7 gross margin. And they're expecting growth in revenue for the next quarter. They guide their Q4 2023 revenue to $70 to $75 million and non-GAAP EBITDA break even, and we will talk about that in a second. They reiterated their plan to more than double their revenue in 2023, and I think this is something that's really huge here, their strategic backlog. They did raise their strategic backlog to now $6.3 billion, which is up from $4.3 billion last year and $2.6 billion in the year 2021. This means they have a lot more money coming in as long as they can ramp up and scale their production. Now I do want to skip over this top portion here. It basically tells us everything we just saw in the highlights there. But on a GAAP basis, third quarter operating loss was $36 million compared to $25 million a year ago and $16.3 million in the second quarter of 2023. So their operating loss has been growing on a GAAP basis, and their non-GAAP operating loss, check this out, for the third quarter of 2023 was $13 million, which narrowed versus $15 million during the same period last year and $16.3 million in the second quarter of 2023. We want to see these losses come down. We don't want to see them go higher. And basically the difference between GAAP and non-GAAP, there are some things that are excluded, such as acquisition expenses, things of that nature, and we all know that Indi has been acquiring a lot of companies throughout 2023. But first, they will see a non-GAAP break-even, and then next comes a GAAP break-even. EBITDA positive EPS. Now let's take a look at what our CEO says. Indi posted solid third quarter results against a challenging macroeconomic backdrop. Once again, well above market growth rates, driven by increasing demand for Indi's highly differentiated auto tech solutions. Based on our ADAS, or Advanced Driving Assistance Systems, user experience and electrification design win traction, I'm pleased to report our strategic backlog has further increased to $6.3 billion. In fact, our commercial success has made Indi the fastest growing semiconductor company in the world among 224 peers over the last 2 years, based on a recent assessment by Morgan Stanley. At the same time, and perhaps more importantly, Indi is the only semiconductor company from the 2021 IPO class that's expected to achieve non-GAAP EBITDA break even in the current quarter. With our world-class design team, extensive product portfolio, and leadership customer base, including virtually every single OEM and Tier 1, backed by a highly scalable supply chain and augmented by successful bolt-on acquisitions, Geo comes to mind, Indi has never been better positioned to capitalize on the $48 billion auto tech market opportunity. Now let's take a look at some business highlights, because they are continuing to make progress within this company. They secured an ADAS computer vision program win at a leading North American automotive OEM, and they're probably contractually not allowed to mention who this OEM is. They also ramped their advanced lighting solutions for enhanced in-cabin applications. This is likely with the help of their recent acquisitions. They captured QI 2.0 wireless charging designs at a US car maker. You set your phone in the center console and it charges thanks to Indi's product. That means they will be selling these products to a US car maker that is still unknown right now. Now I did cover this news when it dropped. They introduced a breakthrough fully integrated 240 gigahertz radar front end RFE silicone receiver. And according to them, it is the best in their class, and this is a first in the industry. They also entered a development contract with the leading aerial mobility OEM, leveraging their Surya FMCW LiDAR solution. Yes, they don't have to just stick to automotive OEMs. There are a lot of applications in which LiDAR can be used, in which simply just using semiconductors by Indi can be used. They recently acquired Exelos for super luminescent LEDs, enabling in-cabin heads-up displays, plus semiconductor optical amplifiers for LiDAR applications. They launched and completed their warrant exchange program to minimize future equity dilution. That is a good thing for shareholders. Now let's take a look at their Q4 2023 outlook, the last quarter of this year. And they give a little disclaimer here to kind of explain the non-GAAP versus GAAP. We provide guidance on a non-GAAP basis only because certain information necessary to reconcile such results and guidance to GAAP is difficult to estimate and depends on future events outside of our control, and therefore is not available without unreasonable efforts. And there is an attached section here going over that. I'll try to leave it for you guys down below. But let's see what Indi's CFO says. Given the strength of our order visibility and new product pipeline, we plan to continue to far outpace our addressable markets over the long run. For the fourth quarter of this year, we expect accelerating revenue growth to the 70 to 75 million range, with a sustained non-GAAP gross margin expansion on a year-over-year basis and operating expense leverage. Accordingly, we intend to reach non-GAAP EBITDA breakeven in the current period, representing a key milestone towards realizing our target model of 60% gross and 30% operating margins. Now, I don't know about you guys, but I'm thrilled with their earnings. The pieces are all coming together with this company. They have an amazing strategic backlog. They continue growing their revenue, and these execs truly know what they're doing, making wise acquisitions throughout 2023, and even before then, to be honest. They are already in the leading OEMs, and I do believe in 2024 they will reach GAAP positive EPS, and their revenue will continue to grow. Soon we'll see 100 million in revenue, which is insane to think when only about 2 years ago they were pulling in like 10 million in revenue per quarter. But let me know what you guys think about their earnings, and let me know down below if you listened to their earnings call. Did anything stick out to you in the Q&A? I still have to listen to that. Next up, let's look at what reaction the chart is giving us. Now you can see that we gapped up. That's not very surprising. And we're looking at about a 15% update today. Now I personally wouldn't be surprised, just based on where small caps have been going. I wouldn't be surprised to see Indi fill its gap, but there is an off chance that it doesn't. More likely than not, though, it is. So keep an eye for some better prices on Indi, but in my eyes, don't be too patient. I definitely love this company long term, and I have been adding it at these prices. Now, small caps have been getting wrecked. This chart is bearish. We're facing a declining 50 and 200 MA. We just saw death cross not that long ago, but I do want to bring you guys back to something I used to talk about here and there in my videos, and this is the May 11 lows. During 2022, a lot of these companies experienced their lows right on May 11, and then some of these companies saw huge recoveries. Some of these companies saw dead cat bounces and then went even lower than the May 11 lows. But looking at Indi, it shows to me that these May 11 lows, anything around this price is a clear buy. Anytime we get to this area, we do see a drastic bounce. Right here in May 11, we saw a big bounce, a retest here in July, a huge bounce again. And for a while, we were kind of following this ascending channel. I don't know if you guys can see it, this kind of blue line here that splits between these other blue lines. Let me get rid of these just to make it a little easier. You can see it was following this trend. However, once we broke this trend, we saw an accelerated sell-off. But now we're just a hair under those May 11 lows. And I really don't expect Indi to go much lower from here. One thing that's definitely been placing some fear on Indi as well as other small caps is upcoming CPI, fear from the Fed. If we can see inflation actually coming down, we could potentially see a more dovish Fed, and maybe these higher for longer rates aren't completely necessary. Maybe we see rate cuts much sooner than late 2024. Any incoming inflation data that comes in lower than expectations, in my opinion, will definitely help these small caps. It gives the market an idea that, hey, maybe the Fed doesn't have to keep these higher for longer rates, which in reality hurts these small caps that have to acquire debt at a high interest rate, or they have to dilute shareholders. Who wants that? In the end, despite this bearish chart, I have been adding to Indi. I think it's a deal of a lifetime. And for me, it's right up there with CleanSpark on conviction. I believe in this company wholeheartedly, along with CleanSpark. And I have been taking advantage of both recently. And here's their revenue estimate. They said a 70 to 75 million. On TradingView, we have a 72.5 million expectation. Typically, right before earnings, they always give us like an expected outlook, guidance that they're going to beat these revenues. They did that last time. They did it like one of the times before recently as well. Right before earnings, they give like a press release saying that, oh, we're going to exceed earnings. And typically they do. But look back here when these guys first came out from being a SPAC. Back in late 2021, they were pulling in 12 million in revenue. And now they're expecting a $72 million quarter. This revenue is going to keep growing drastically. These margins, as you can see, are continuing to get better. And they are going to reach non-GAAP EBITDA break even. And then next comes GAAP positivity, GAAP profit. Now, let me know, have you been loading up on Indi? Do you even know what this company is? It is definitely a very slept on semiconductor company in my opinion. And right now, honestly, I don't mind that. But soon the market will get wise to Indi and realize what is right in front of their eyes here with such a company. And thanks again, as always, for watching, guys. I hope you have a good weekend, and I'll catch you next time.